Mark Draper with Andrew Clifford, Chief Investment Officer of Platinum Asset Management. One of the things you've written about recently, Andrew, is that the Chinese economy has been a wonderful economy over a long period of time, but is under great stress, and under great stress through the financial system, as I understand it. There's a word called shadow banking, which is often linked back to China.
Yes.
Firstly, can you give us a quick rundown of what shadow banking actually is?
Okay. Well, in a way, it's not anything very different to what has happened in the financial system all over the world, where we've disintermediated the banks. So, big companies, they don't go to a bank to borrow money, they have a bond issue and go straight to the investors. And it's not dissimilar to that. So the main part of the shadow banking system are these money funds, if you like, or trusts, and individuals put money into those funds and they lend directly to companies. Now, why this has arisen, and then this is always the problem with trying to heavily regulate and control a banking system, and it's why in the West we stopped doing it in the 70s, because everyone gets around the rules, and the rules they were trying to get around were how much lending the banks could do and who they could lend it to, and at what interest rate you could do it. So the appeal of these trusts from the investor was that he was getting a much higher return, often 10, 12, 15%, when in the banking system you were getting 3 or 4. For the borrowers out of this system as well, the banks wouldn't lend money to them because they weren't allowed to, or the banks would lend to them at the official interest rates.
Right.
And often a lot of these were the property developers who weren't meant to lend or who weren't meant to borrow money. So you have had a significant increase in the amount of lending being done outside the banking system. But of course, who's been the main seller of these funds have been banks themselves.
Yeah.
So the great concern is not the fact that this shadow system has arisen, because it's natural that it will, and that the banking system will need to deregulate, and indeed in a more sort of sensible development in the last year we've had a very strong take-up of corporate bonds as a way of financing, and the banking system is seeing even more disintermediation. I think in the last half of last year, more than half of new loans were done using some type of corporate bond or bill, much as Australian companies would do. The problem here, though, is that it was about skirting the rules, and of course many of these borrowers are probably not the best quality borrowers, and you have a situation where do the individuals, and again, it's the minimum investment in these things are normally $500,000 renminbi, so $100,000. So they're not,
It's not necessarily aimed at mum and dad.
It's not, but still, is it clear, what risk they're taking? Because in theory, if there's a default, the risk is on that fund, and they should lose. But as we know, in reality, in banking systems, when they blow up, governments tend to step in and help them out.
I guess that was the next question: is what happens if there is a blow up over there? What is the most likely probability?
Yep. Look, I think that as we see when banking systems get into stress everywhere, governments do tend to help them out. But it's been very clearly the case in the West that I would probably take the view that the governments have been too helpful, as in shareholders have come out of it. If you look at a lot of the US institutions, these shareholders have come out of it pretty well. And really, in the first instance, I think the shareholders should have been, if you want to minimise moral hazard in lending, the shareholders should have taken 100% loss, and perhaps some of the bondholders should have taken a loss. And I accept that it's unlikely that novel depositors are ever going to really get hurt very badly. I would think in China they would take a much harder line approach on that, simply because that's been their history. So these trust structures, it's not as if they're a completely brand new thing. They did exist previously, and have existed for a long time, and have been re-regulated as a result of some big losses that were taken in the sort of Asian crisis period, where you had some of the big trust companies go under, and in those cases a lot of the lenders were foreigners into those trusts, and they got hurt. So
there's been a lot written about this, and there's been some commentators suggesting that the Chinese shadow banking system is the next US subprime. What's your reaction to that?
Oh, look, I think it's certainly an area of exposure for the Chinese system. I think nothing's ever quite like the last crisis, and the US subprime had some very specific characteristics to it that are not here. But a banking crisis is a banking crisis. So we've seen a few of them now, and the question is just how bad some of the lending has been, and just how much of a slowdown that economy is going to see. So I don't get overly worried about what I can see as an economy. I think that can actually, because it does still have growth potential, I think it can get beyond those problems probably more readily than many of the developed markets.
So it's not necessarily keeping you awake at night, but you're keeping an eye on it.
I think the key thing here is it's about avoiding those industries that have taken on a lot of debt and where there's potentially a lot of excess capacity. So steel cement, areas that, it may not be apparent this year or next, but eventually what we know is that, China has enough steel capacity well in excess of what its very long-term needs are. And at some point, some of those, I wouldn't want to own a steel plant, and I wouldn't want to be lending money to one. But I think if we can avoid that and get into the more interesting parts of the Chinese economy,
like consumer-led parts.
The consumer-led parts, so some of the auto companies and the internet companies, other consumer products, insurance, these stocks aren't awfully expensive. So I think that, we're being well rewarded to take on the risk that there'll be some, ructions in the financial system there. And certainly the government's in a good position in terms of their financial capability of being able to fill that gap.
I guess it's another good example of you've got to scratch the surface to see what's really going on, and can't apply a blanket China's good or bad, or you've really got to go the next level in your research.
No, absolutely. Yeah.
Thanks for your time, Andrew. Thanks for the insight.
Yeah, thanks,
and more information, check out platinum.com.au or our website gemcapital.com.au.